Afternoon, everyone. It's a few minutes to 1, 12:45, and this is an explanation of the trade that I just put out there to buy the Weight Watchers February 18th, 17 and a half calls. And I want everyone to understand the rationale. First of all, this is a very high risk um, transaction. And the reason for that is the fact that, unfortunately, the structure of the options available in Weight Watchers is every $2.50, as opposed to, for example, yesterday's trade in UNG calls, which were every dollar. The 15s are a little on the expensive side. The 17 and a halves are cheap, but frankly, they're cheap for a reason, because if you think about it, down here at 14.94, they're $2.50 out of the money, which is pretty substantial. However, this is the time of the year when Weight Watchers generally moves, and the chart that you see on the screen is the weekly, and I'll show you we are riding the lower Bollinger Band, which is generally a good place to buy it. Sometimes, it rolls down and starts up, but this is actually only a move from 2170 to 2389. But you're talking about a $2 move in a $20 stock, so a 10% move. And we have time. As you can see, this is different than my other charts because the other charts have a darker background, but I wanted you to be able to see these. This orange line is the on balance volume. This straight line here is the 75-day linear regression. When we are below it, we're oversold. When we are above it, we're overbought. You can see that we were overbought in here for a while, and ultimately, even forgetting about the top here in the 40s, if you were just looking at it in here in the low 30s, the move down was still from $32 and change straight down to 21.32. So this stock can move. As I said, this is their time of the year. It's the same thing with gym memberships or Peloton sales. People look at their New Year's resolution, they get all excited and they start doing something. So seasonally, this is a good time of the year. The MACD has gone absolutely flat. I don't know how really to interpret it, except that when I go back here and it went absolutely flat, we had a move from mid range in here, 27 and change in 3 weeks up to 37. So substantial. You go a little further back, you see it also went flat in here, had a move from the 17 area, 6 weeks up to 33. And if you go back even further, you'll see that it went flat in here. This is actually when I believe Oprah bought into this, and she's a fairly substantial holder. The stock went from under $10. I mean, it took a year and a quarter, but it ran up to 105, and it did it in a very controlled manner. So I'm looking at these. They're only 40 cents. I think they're a little overpriced, but the fact of the matter is, I tend to trade on what I would call a cash flow basis. And when you make $1,200 in the big account or $620 in the small account, I don't think that taking $80 worth of risk is really that much of a big deal. So I'm in them. And I don't really want you to go ahead and buy the 15s, only because most expensive option you can buy is always the option at the strike, and here we are at 14.89. You're talking about paying $1.10 for something that's out of the money. If we're going to do that, I would just as soon be in the 17s. Now, I also want to show you, expanded this out, just on a normal run, just back to the upper Bollinger Bands would give us a move to 22. And I would think it would be pretty fast. Even if we don't get to 22, we could still get to 19. $17.50 at 19 is $1.50 plus some time premium on a 40-cent call. I think that that's an appropriate risk. Have a good day. If you have any questions, DM me.